Hey, what's up, everyone? Welcome to another episode of Trading Takes with me, Sam, Chris, and Judah, presented to you by Investors Underground. Now, tonight we have another very special guest, highly regarded in the IU community. He also doubles up as my personal bodyguard whenever I'm in the US. It is, of course, Nick, aka Nkaz. Nkaz, I don't know how you say that.
Thank you, guys. Thanks for having me on. I'm happy to be here. I'm looking forward to it.
Yeah,
glad to have you, Nick.
Joining us. Thank you. And just to kick us off, a brief intro, just in case anyone doesn't know who you are.
Sure. I go by Nick, Nkaz in IU chat room. I've been trading for a little over 10 years now with a focus on short selling, but that's adapted over the last year and a half, I'd say. But yeah, brief overview. I started trading right out of college, got a few jobs at some big banks, and immediately realized trading is my passion. I have no interest in working for anybody else, 9 to 5. It's just not the life for me. So I stuck with trading, and thankfully here I am today.
Yeah, why work 9 to 5 when you can work 8 a.m. to 8 p.m. every day or whatever it is instead?
18-hour days.
Yeah, exactly. And I feel like we should perhaps, there's an elephant in the room, and this facial hair. You didn't have this in Vegas. What's going on?
Yeah. You know what? That thumbnail that keeps getting posted to my Twitter, I look like I'm 14. I got to do something about that. I look like I'm 14 anyway, so this is my attempt. And any feedback, any critique would be highly appreciated because family just doesn't cut it.
I just can't comment on facial hair. I mean, Chris looks like the groomed one of the bunch.
Yeah.
No,
but what you see is what you get. That's the only place I can actually grow it. So I can't get like a full like beard, or I want like a Duck Dynasty beard or something legit. But this is all I got.
You and I both. I look Amish at this point.
Yeah, you need to.
Also, nothing wrong with looking like you're younger, you know.
There'll be a point where you're like, I need to shave this off. I want to look younger again.
Yeah, one day.
Cool. Yeah, one day. So tonight, well, I mean, we've literally said tonight we are going to talk about anything and everything. And Chris, what do you want to kick off with tonight?
Well, one of the things that I thought would be good is to highlight one of the craziest things that we've seen in the markets, or basically anywhere recently. And one of the craziest things that I've seen is I think it was a ticker called NILA, and this was like a small cap who put out a press release that they were going to buy like 24,000 Bitcoins or something like that. And this, I mean, it has like a 3 million market cap, and it's saying it's going to buy a letter of intent to buy, billions of dollars worth of Bitcoin or something like that. And it was up 2,000% on the day, and then it opened today down 95%. So I mean, just ridiculous stuff. But I think you've seen a lot more of those headlines and kind of ridiculous claims made by these companies until like the SEC or someone like shuts them down. Like if nothing's happening to these people, if like the SEC is like, these companies are too small, we don't really care, then they're just going to do crazier and crazier stuff until they end up like Sam Bankman-Fried or whoever just got sentenced to 25 years.
25 years, yeah.
It also doesn't happen often enough. Like, when's the last time we saw an OTC like that go up 18 times overnight? It's not like every day. If it was, then there would be a lot more penalties, but it's very rare these days. Everyone's still like in the shitcoin market and playing there.
I was saying there's no regulation over there. I mean, I think we tend to see it I find it funny when there's a snowball effect, and there'll be like a CEO who puts out something, he thinks, oh, this is a great idea. I remember like back in the day, GNS basically said, we're going to launch a short sale investigation or whatever it was. Then all of a sudden the next day we had PR, and everything just went crazy. I don't know how that rates in terms of stupidity. I'm sure, I mean, Nick, you've been trading a long time. I'm sure you've seen a lot worse than that.
I definitely have, yes. 100%. I mean, I don't trade the OTC tickers, so I'm just not looking at these moves. But I mean, one recent ticker that comes to mind is LUNR. I mean, that was a lot of fun. And I think that thing went up to like 14 from $1. And it was just a complete joke. They set up a few PRs with NASA, and what happened? I think it just tipped over.
Yeah. So what's that? Is that the one that landed on the moon and fell over?
Yeah.
Right. Yeah.
Yeah.
Wait, so Nick, because you mainly short at this point, and we're talking about like these headlines that come out, everyone follows. A company comes out with something that will end up going up, a couple 100%, and then other companies will follow, and then it becomes a theme for however many days, 3-4 days a week. How do you determine like when and which to go for? Because the first one usually ends up going up like a wild amount. Second one goes up, but not as much, and then like slowly starts to die out, and eventually people are stuck holding like 7 stocks that are completely meaningless. So on the short side, when are you deciding which one to take and when to take them?
100%. So that's a good question, and I think this is a lesson that I learned from Eric, who basically, taught me that when you want to basically give these stocks that are running, you want to give them leeway. You want to let other people step in and make that mistake. And I think that same rule applies amongst, a lot of different arenas. You can go from sports to chess to different things, but you want other people to make the mistake first, right? So his rule on earnings plays is, I think, second or third day before he starts to get interested. And that's the same thing for me when I'm focusing on these crazy runners. So I'll let them do their thing for a day or two, 3 days, 4 days, however long it takes. But I think one of my strengths in the market is recognizing weakness, and when things start to lose momentum and fall under key levels and fail to break back over VWAP. And those are the ones that I hone in on and focus on. But I think it's really important to be patient and wait for things to play out before putting on a position, even if it's a starter. Just be patient.
Mm-hmm. Mm-hmm. Yeah, because a lot of traders, they'll do the same exact thing, but on the long side. If they're not comfortable taking on the day one, they'll wait 2-3 days, and generally that will either squeeze out or liquidity type setup. And I guess it just matters which way it's going and what kind of trader you are, because same thing works on the long side too.
Exactly.
Yeah.
Sorry, Chris. Go ahead, Chris.
Yeah, and Nick, you trade a lot of tickers, both sides. Like I'll see with the crypto names, you'll trade them, on the long side, flip to the short side. So you're really unbiased. Were you always kind of like that, or did you start out with a bias, or kind of how did you shape your trading personality?
Not at all. I mean, when it comes to my trading personality, I think it's an interesting question because I can characterize my trading personality as somebody who's more active as a short seller. For example, I did very well in the markets in the beginning of the year, but I had to adapt as the year went on. I had to get more comfortable longing and more comfortable cutting positions faster. But I think the question really should be, what are your strengths and weaknesses, and how do you adapt to them? So I know that I'm more of a contrarian, and by that I'm more comfortable shorting. I rarely swing stocks, and but I would say that my strength is recognizing weakness and when to short. My weakness is that I'm stubborn. So knowing that, and the only reason I know that is because of the years and screen time and all the experience that I've put into trading, I know that I'm a stubborn person. So how do I trade around that? I set strict rules in place to stop me from letting my stubbornness and emotion get in the way of my trading.
What's an example then of one of those rules?
So for example, I mean, and this varies, based on, different ticker, different sizing. Yeah, if you're trading a $2 stock, it's very different than you're trading a $200 stock. But I do like the 7% rule, which I hold by, and that's a strict rule for me, which is I will trade a ticker up to a 7% loss, and then I get out, and I'll give myself. And this was something that I actually learned from Nate. I had a long conversation with him like a year ago, and he told me that a strategy that he implements, and then I started to implement, and it's worked really well in my favor, is he has a 3-stop rule. So basically, he will take a position. If he gets stopped out on it, he can re-enter. If he gets stopped on that as well, again, he has one more try. If he gets stopped out on that, he knows he's just wrong. That's it. It's as simple as that, and it's just move on to the next trade. So I think that's a way that I've been able to implement my risk management. I have that 7% stop in place, and I get 3 tries to prove myself right. If I'm not right after that, I move on. I just move on.
Yeah.
Is that forever? Do you cancel that trade forever? Like, or is that just for the day?
No.
Because, like, let's say you're just early, and now the next day you realize a really good setup, but you already stopped out 3 times yesterday.
Exactly.
Like,
So
would you enter, or would you cut that off?
I'll always keep that on my watch list, right? It's, and not necessarily to revenge trade it, but I had a thesis to begin with. It didn't work out for me, and that's fine. The market doesn't do everything on your timetable. Sometimes you have to give it a day or two, but I'll definitely keep it on my radar, keep it on my watch list. And when it finally does set up, I will take that position and hopefully get the opportunity to pyramid into it as it comes down.
And do you think that because you have that rule, do you miss certain shorts because you're not quite sure and you don't want to risk that 3rd stop out? So like instead You're waiting, and then it ends up going without you.
100%, especially with the small caps or micro caps, things that are trading $2, $5. It's very easy to get stopped out on a 7% rule on a very small price movement, depending on your position size. So it definitely, I would say, hinders certain opportunities that I can take, but at the exact same time, it allows me to focus on opportunities that I know that I'm good at and have been tried and proven, as opposed to, we as day traders, we know this. We constantly have to adapt to different scenarios, and we wake up in the morning, and one thing that's so awesome about our job is that there's almost zero monotony. There's always something moving throughout the day. You just have to decide whether it's something that you want to trade or not.
Mm-hmm.
Yeah, that's a nice rule too, the 3 stop outs, because such a big part of trading or anything, it's getting a read on something, and that's basically are you in tune with how it's moving, why it's moving the way that it is. And if you're stopped out 3 times on something, your read is off, at least for that day. And so I feel like, especially if someone does have a stubborn personality, you can just keep going back to the same name, like, absolutely, I'm going to figure this out, I'm going to do this. And that's a great way to kind of keep yourself from doing that. It makes total sense.
Yeah.
Yeah, it only takes, for every time you do stop out that 3rd time and a 4th entry would have been right, there's still that one time where you would have kept going 4th, 5th, 6th, 7 tries, and before you know it, I don't know, we've seen loads of those this year. Like my biggest loss.
Exactly. And you know what, that comes from experience, because I've been in that scenario where you don't have that 3-stop rule in place, and you're right, and you add, and eventually you are right, but you miss the trade entirely, because your average stinks, you're way oversized. Maybe you got blown out already. There's a million different variables that can go into that, but I think the takeaway here is patience.
Yeah, and I think you're also
do what they're going to do, and then attack.
Yeah, and I think at that point you're trading off your
Prior risk.
Oh, if you're prior risk and you're trading off like your value of your position, not off levels and what you should be
Exactly.
trading off. So you're looking at your P&L rather than charts and like
Right.
key levels and resistance, support, level 2, whatever it is, however it is you
Absolutely.
trade.
But
It
you're
also
also
allows me to be bias free. You know what I mean? Because if I see the strength, I can get out quickly, you know, with almost no emotion, as opposed to if I took a position early on the day before and I'm underwater on it because I swung it overnight. There's so much emotion involved. It hinders your ability to trade.
Yeah, I was just gonna say, but you're trading based off of a thesis that you might have had at, let's say, 9 o'clock in the morning, and by 11 o'clock,
It totally changes.
null and voided, and you're still. I mean, that used to be one of my biggest issues. Is like I'd have a thesis that, let's say, something's going to push through pre-market high, highs and fail, and then it would hold, and then it would start to build, and I'd be like, okay, it's going great, it's going higher, it's even better, but actually, thesis was out the window, and all I was doing was just, I was just burying myself. That's the that's the truth of it. So,
Yeah, and Sam, you were telling me a story recently of a very expensive gallon of milk that you went to go buy. You like covered a position, you way over covered it, you got long, and then like it just all fell apart. What was that story?
So you can't criticize me for poor risk management here, but my biggest loss last year, I was trading something. I used to trade 4 a.m. a lot more, and it was some Chinese name that had ran up massively, and I was fading it into 7 a.m. and it was I was up like $3, and I was like, I'm going to cover some before 7 a.m. but at the same time I thought I need to get some milk. So I used to live near a shop, so I went to get some milk, and I'm in the milk aisle, and I'm thinking, right, it's just before 7 o'clock. I need to cover some. And then by accident, I overcovered by 10x my whole position. 7 a.m. came, flushed, and I'm on my phone. I got this massive long, and I'm just thinking, I'll be honest, I was just thinking shit. And I was trying to work out on my phone, because I was using like Daz Mobile, and I wasn't 100% sure if I'd added, at the time I wasn't sure whether I was actually short extra large or long extra large. It was only then when I was like checked my own, realized I was like, oh shit, and then I panicked out, and then that was the bottom for the day as well. So just to double compound. I mean, come on guys, I can't be alone with.
I hate to one up you, Sam.
Go on. No, I want you to one up me.
When I first started out full time, long time ago, this was when Tesla was like having its crazy run up. I remember taking a position short in the morning. It was like a Thursday or a Friday. I can like almost remember it to a T. But I really had to shit all of a sudden out of nowhere. Like it was an emergency. I had 6 seconds, or it was nuclear. And I go to the bathroom. I was in there for maybe 10, 15 minutes maximum. And I come out to a complete and full liquidation.
Oh, crap.
It was one of my earlier accounts, so I was like a little bit above PDT, but it was a $30,000 shit.
Wow.
You have a setup in your bathroom now?
So no, the moral of the story is really just don't have Chinese if you plan on trading the next day. And if you do, make sure that you have a bucket nearby.
I mean, that's kind of grim. I don't know.
No, really, the takeaway was just the importance of risk management. And, if you're trading something as volatile as Tesla was at that time, even with small size, you got to expect the unexpected. And so now, anytime that I'm going to step away from my screen for a little bit, get lunch, go to the bath, whatever it is, I'll either liquidate the position entirely if it's oversized or whatever, or I'll set stops in place and hope things work out. But that's something I'll never repeat again.
Don't try and make that too serious about risk management. The bucket was better. But we've got Chris and Judah here, and these two are just consummate professionals. I don't think you either of you have got any horror stories.
No,
yeah.
yeah.
Oh,
I got some real bad ones. I had Luckily, it didn't turn into a huge loss, but it could have been. And it was one of the scariest trades that I've ever been in. And it was, I think 2021 sometimes. And I was having like a banner year, had, some of the best trades of my life. And I was like sizing up on everything. And I decided that I was going to take the largest size position that I had ever taken on Workhorse, WRKS, or whatever that stock is, some piece of crap stock that was running, had high short interest and everything. And I'm like, you know what? I'm really going to go for it. I think that this thing can run. So I take one of the biggest positions that I've ever had. And like 3 minutes in, there's like news of an SEC halt on it or something. I was long on it. And the stock goes up from being up, 10% on the day or something, and immediately goes down 10%, halts. And I thought it was going to be like indefinitely halted due to the SEC thing. And I was still working a job at the time, and I just like dropped everything. I was like on my phone. It was insane. But that was definitely the scariest trade that I've ever made, because I thought that the largest position that I had ever initiated, I had other positions that ended up, growing to larger than that, but this was the largest one I'd ever initiated. Like 3 minutes in, literally, I thought that it was going to go to zero or something. And after that, I was like, no more sizing up on crap companies. So that was a scary one.
Yeah, but what happened? What happened after the halt?
So it was halted down, I think, for volatility, and it was like a short report on it or something that was like alleging this, but I don't think it actually had any like follow through. But it was like 10 minutes of like everything on Twitter, everything like reposting one of those either like fake headlines or something. But I think it was like someone was in it short and they were like trying to get bailed out, and so they made up some headline on it. But yeah, that was brutal.
I think Workhorse, that was also the name. It had like they were competing with like USPS or they were competing with another company.
Oh, I remember
those trucks
like
or
2020?
USPS. Yeah, it was like everyone thought that they'd be using their vehicles.
That's fun.
There was tons of news around that and headlines, and so it was very volatile at the time, and the short interest was really high. So
yeah,
remember the move in that.
Yeah, and I used to love trading like high short interest names, and you get something that's has a bunch of short interest, it's grinding higher, it gets up to a level, and you think it's going to trigger. The volume comes in, huge cover, and like that's a trade that I had taken many times, but it was just the wrong stock, the wrong headline, the wrong size. It's like everything went wrong. But luckily, when it unhalted, I was able to get out, and it was definitely a loss, but it could have been so bad. But that was a scary one.
I mean, that doesn't sound too bad for I know the position-wise, but in terms of, there wasn't any stupidity there. I mean, it
was with the sizing.
Mishaps or whatever, however you want to describe the other situation. But one of the stupid things I did, and this really sums me up, and really one of my former dark sides. I remember, like, similar to like, perhaps somewhat similar to Nick's stories, I had to leave for the afternoon. So I put a stop in place, and then the stop, only half of it got triggered for whatever reason. I think I'd made the error. And then before I know it, like I got to this location where I was going, it's about an hour away, and it was just going against me and against me and against me. And I didn't have a travel setup with me. I was just on my phone, and I did, instead of like doing the sensible thing, like what's the sensible thing to do in that moment? Anyone? It was probably to get out, right? And I was just going add, and then I held into after hours before getting. I mean, that was my worst.
The after hours hold and hoping is the worst, because it never does what you expect it to do. It's like you think this thing could either flush or rip, and then it just ends up really doing nothing. And then like the way, like when it makes the biggest moves, it's like usually after 5-6 o'clock, like after everyone's already logged off, you check back on at 7:30, and this thing has just grinded like 30, 40, 50%.
The only people that are left are shorts that are trying to get out, and they're just pushing the price up.
Yeah.
But I think that goes back to the, like, we all kind of, one of the reasons why we came into this is that we didn't like the idea of a 9 to 5 or that strict regime or whatever. And I always respect the grind, and I do respect anyone that can go from 4 a.m. to 8 p.m. But there's just part of me that's like, geez, I've worked pretty hard today. I don't want to lose it in after hours or do something stupid. So I just switch off.
Mhm.
And I learned the hard way. I mean, it was always a losing session for me. And then I just started to implement a rule and said, I mean, you can't talk though, Nick. You're trading like all the time. Like
Yeah.
all the time.
Yeah.
You don't stop at 4 o'clock.
I've been trying to, over the years, I've really been trying to focus on market hours and end my day by like 4:30, 5 o'clock latest. I was overseas for a bit, so I was trading more random hours. But in terms of day structure, I wake up very early because I'm in Colorado, so I'm 2 hours, behind New York. So by default, I got to wake up early. But I really, over the course of my career, have become more patient in taking positions and, letting pre-market do its thing. And I think most importantly, and it's very important for new traders to understand this, stop losses and whatever you have set up with your broker, they don't work, pre and post market. And that's huge. You know what I mean? Like if you're somebody that's trading with limited risk or a small account, you got to be very conscious of that. And you can get absolutely liquidated, and it won't happen until the market opens at 9:30. You know what I mean? So it's it's a risk that I find sometimes to be unnecessary. Obviously, if there's an opportunity that comes up, I'll jump on it. But go ahead.
Yeah. How does the action and the volume compare now than it did before COVID? Because I know COVID was wild, pre and post
COVID was
market.
wild. I mean, I
Like
don't.
before COVID to today.
Yeah, I mean, I can't really recall when the market was really like this until after COVID. I think, even today, you look at NVIDIA, SMCI, MSTR. I mean, these are large cap companies that are trading like micro floats. Even the S&P 500 is trading out of whack. I mean, it's nothing I've seen before.
Mhm.
So the market is constantly changing. More and more money is being poured in by the Fed. Yeah, you got to adapt. The market 3 years ago, post COVID, is not the market it is today.
Yeah, and Nick, I mean, you have an interesting background. You have a military career and everything. You've been all over the world. You've managed trading with that. What's that been like? Trading different time zones, being in different countries. How has that been?
I mean, that's definitely tough. Obviously it depends on the country that you're in when you're trading. But listen, I mean, markets are my passion, and I've never let anything really get in the way of that. Even early on in my career when I wasn't trading full time and I had to take full-time jobs at banks, investment firms, various positions. My passion was always investments. It was always trading. So, I mean, even recently, when I was overseas for a while, I always kind of made it a priority to keep up to date, at least not necessarily place a trade every single day, but keep up to date with the market, see what's moving, what's not moving. Because I do feel that if you sit out for some time, you lose a sense of the market. You lose a sense of the feel for things and
the read on the market, definitely.
Yeah, precisely.
So it sounds like you've hit a few time zones then. So what's your favorite and what's your least favorite?
That's funny. I actually think that the West Coast, like where I am in Colorado, is my favorite because I wake up early by default. So I get my day started early, work out, breakfast, get to my computer by, I don't know, 6:30 a.m. New York time. So pretty early.
Which is like what, like 4:30 your time?
By me. Yeah.
You've done gym everyone.
Yeah, I wake up at 4. I do like a quick gym session, eat a little something like protein shake, and then I'm at my desk.
With how much sleeping?
usually asleep by like 11. So I'm getting like 5 hours a night. And I find that I can operate pretty well on that, but ideally 5 to 6.
Wow. Was it like that before the military, or did you
No.
learn to operate with limited sleep?
Dude, I used to be somebody who can sleep all day. Like I would stay up until 4 in the morning, wake up at 12 noon. Can't do that anymore. I don't know if it's I turned 30 and something changed, or the military. I don't know. But yeah, I find myself waking up really early and going to sleep a lot earlier.
Yeah, I was that same way. I used to be able to sleep all day. I would sleep late hours, wake up late, and then I guess the market's what brought me to normal regulated hours.
Definitely.
But that's just being young. I think that's just, isn't that just being young? Just like
it could be. Like I said, I turned 30 and everything just kind of just like went downhill.
I mean, everything goes downhill at 30. Hangovers suck. Need sleep. It's just
everything.
I mean, it's still hard to believe you're 30. If you took that off, people might.
Hey, 32. 32.
Not doing bad. I mean, that's
quite controversial. 16.
you wish. But I don't think many people would say West. My favorite. A lot of people say that like I trade +4. I know at the moment it's +4. Usually it's +5. We haven't daylight saved in the UK yet. But I actually just really when I traded with Nick, I really like Eastern.
Yeah,
I really loved Eastern, just being up at actual
normal hours.
Just being done at 4. Sometimes I'm not done till 9, like 10 o'clock by the time I review, and then I'm like trying to.
For sure. So that's like one thing about living in Colorado is like the latest I can go is 6, which is really not that bad.
Yeah.
No.
What about you, Chris?
I'm in Central Time, so I bounce between Chicago and Nashville, and I'm in Nashville right now. So it's actually a pretty good time because the market opens at 8:30 a.m. and you're done by 3. So that's pretty ideal. I'm not a huge morning person. I'm definitely like much more of a night owl, which some of the guys in like the Traders Lounge they'll attest to that. I'm always like lurking at like 11 p.m., 12. I'm up late, but yeah, I just wake up an hour and a half before the market opens or something, do my prep and get to it. But I like that time zone. And before that, I lived in Ohio in an Eastern time zone, so that was fine too. It opens at 9:30 and everything. But yeah, Judah, I'm surprised that you were just telling us that you're out on the town in New York. You're getting sushi. You're out partying. You're doing all this stuff. So.
No, I try to be sleeping. Generally, I try to be sleeping by like 10:30, 11. But like now, I started dating, so I mean, it's hard to just like cut that off at 10:30, 11.
Don't do it, Judah.
Early stages, so like I'm up late now and I'm not getting much sleep. But generally, no, I like to sleep early.
As long as for the right reasons, of course.
It sounds like the good type of dating, at least. So
it's good. But I try to wake up, I guess, 2 hours before the market opens. I spend like a half hour, 45 minutes praying, and then that's really it. It's just my morning just consists of praying, and then I walk my dog, which is like 15 minutes, and then I'm in the markets. I guess I would say like an hour and a half to an hour before. I realized like after the COVID settled down and the market settled down that I don't need to be there from 7 a.m. because like that's when the press releases really start to roll out, 7 a.m. and then every 30 minutes. And like the most important ones were 8 o'clock and the least important is like 9 o'clock. So like the main press releases today is like 8 and 8:30s. I think like 8. And you have a couple like wild runners that are like 7 o'clock or 7:30. Those are usually quiet. They'll come back around like closer to open and they'll go a lot further. But now I just think like an hour, at least for what I do in the way I trade, like an hour is more than enough time that I need. Go through all pre-market like gappers, and it's really big picture. So I don't really, I see if it's holding up into open, but like it's just like going through, what is it, 5-6 tickers. Like I don't trade. I try not to trade pre-market. So there's no reason to be here like a couple hours before.
Yeah, that's a nice morning routine too, because I feel like showing up just to the market after having exercise, after having some calmness, and you're just in like a really good place to start trading, as opposed to someone who either just rolled out of bed or someone who's like, obviously it's good to like work out and everything beforehand, but if someone's like pumped full of like pre-workout and they're all like wired and then they get to the market like trying to punch buttons,
Yeah.
It seems like a nice routine that you got.
That's a nice way to blow your account, I think, pre-workout.
Yeah.
Just 300 migs and then just like start slamming butters. I mean, my morning routine actually shifts into like an afternoon routine because the market opens 2:30 usually. So by the time the market opens, I've usually hit like 100 golf balls. I've worked out, I've chilled, I've chatted to my mates. That's my day. My morning is my fun bit, which is kind of weird actually. Probably the reverse of absolutely everyone. Just thinking about, you've touched a lot on processes before, Nick, and I'm just like really keen to find out, because for those of you who've seen Nick's charts, they are active, is a way of putting it. There's a lot of arrows. How have you come up with this? Because I think like the rest, the three of us are probably a bit like, I think we all describe ourselves as like big picture guys. Like I tend to like trade small caps, but like from a big picture, fewer entries as possible, let it work. But you are busy.
Yeah. I can honestly say that I aspire to trade like you guys one day, where you take a position in the morning, cover at the close, and it's just 2 arrows on each end, and it's a perfect trade. It's just not my trading style, and I've learned that about myself, I guess, and I've turned it into a strength where, I'll be very active, and I'll take a short position and I'll cover it as soon as it hits support. And I know a lot of people, maybe wait and hang around, see what it does at support, or maybe they'll double down at support, hoping it goes lower. I'm a much more active trader. I'd rather get out of the trade and then re-enter it if it does break that support. So I'll do that over and over and over again. And honestly, you'd be surprised. Like these wins add up, and they add up in a big way. And what's more is that they create a lot of my own risk and entry levels. So as opposed to just looking at, just looking left at, prior support and resistance or VWAP, I can trade around a core position, which I often do. Like I'll have, let's say my max share size is 5,000 shares. I'll have 7,000 shares, and I'll trade 2K shares around my core. So you'll see a lot of those arrows around a core position. And then finally, before I get out, you can't really tell by the arrow position size, but that's definitely an adaptive style that I've learned, is take a core position. If you're wrong, get out, don't add to it. If you're right, add to it and trade around it. So yeah.
I think Nate does that a lot too. And I feel like I've heard him say that it helps him to get a really good read, because not only are you watching the chart, do you getting fills? Do you keep missing fills, and you get like a different perspective?
Exactly. Yeah. And this is where level 2 actually really comes into play. Like everyone says, level 2 is a language. You got to learn it. If you're trading without it, you're trading blind. And I think when you're trading the same ticker actively, level 2 really gives you an edge if you understand it.
Yeah, that makes sense. Yeah, I'm definitely much more of a 1 or 2 entries and 1 or 2 exits, and if I'm wrong or if it's not,
I admire that. Like I do wish that I had that patience, and I do think that one of my strengths is patience. But when it comes to in and out of trades, I'm definitely very active, and I definitely need to get better at letting winners run. But that's a constant battle. It's it's something as traders that we always have to work toward getting better.
I feel like there's pros and cons to it too, because a lot of times, like when I'm taking a position, I'll have a wider kind of like risk or areas. So I want an idea of, am I generally right? And so you might have like the 3 stop out rule. What I might do is I might add those together and have a wider risk. And so it's like, if I can get this right in the morning or whenever, I'll just kind of I'll get in at the best place I can, have a wider risk. And if it's just not working, if I'm fighting it, then I get out. And, maybe I'll try it again later on that day. But usually if I mess up on a trade or if it's just not working out for me, then that's it. I move on.
100%. Yep.
I definitely admire it's something that I'm trying to work on as well, is actually like doing the opposite and trying to be more proactive, covering, re-adding, etc. And just because there's nothing more frustrating than when you're like today, I was up really big on IBIO. We're recording on the 28th, and I mean, it just came back and took me out, and I'm like, damn.
Yeah.
That's,
Yeah.
and if I was, and I should have been proactive. And that's a name where, you know, someone with your style, you would have made money. That's the
Well, I think especially in this market where we're definitely in a bull market, right? Like the stock market's going up every single day, crazy things are running. You really have to be proactive, especially on the short side. And that's mainly what I'm doing is I'm shorting stocks in the morning. And I generally find that by 11:30, 12, you know, things start to bottom out and then just grind back with the market. So being proactive is really helpful in that situation as a short seller. If I was a long trader, you know, that changes things. But being proactive has definitely helped me in this market. Now, if we were to enter a bear market, I know that I would do well, but would I hold on to these positions as long as I should? Probably not, because I'm so proactive.
Mm-hmm. Mm-hmm.
I think the biggest issue, like for me, I guess once I stopped looking at the difference in dollar value of like, oh, if I sold there, if I just like held on for a little bit longer, like once I stopped counting the money and difference, like that's when things change. Like I don't do the math and see like, oh, if I sold like $3 ago, I could have made this much more. It's just like, as hard as it sounds to do, I just forget it. Like I just move on and just like focus more on the process than on the dollar value. And this is like where you say about like scaling and holding on throughout the day, like looking at the fluctuations is where most people get scared and stop out when there was no real reason to. Right. So like I think it's just really all about the process, and like as hard as it is, you got to just like remove it from your mind and just like it's hard to explain, but just be casual about it. Like don't focus too much on it, you know, especially when you're up. That's when like you should be worried the least.
Right.
And that's like when things are flipped. Like people who are down a lot, they'll either add to it or they'll continue holding on, waiting for it to come back. Yet when something's going their way, they're rushing to sell that position. So that's just something that at least changed for me, was when like I cared less about the value and difference between like selling it like, you know, $3 early and $3 late. It's like, oh, this is what I could have made. It's like, just move on. There's something every hour, every day. There's no reason to be counting the money.
Yeah, that take of just kind of like there's always something moving. You know, one of the things I want to bring up in here is kind of like, what do we love most about trading? What do we not like? And just to kind of like kick that off, one of the things that like I love about trading is that it's constantly changing. You know, you never get bored. It's never monotonous. Like there's always something to learn, always something to do. But it's also kind of, it can be one of the downsides is that, especially as a trader, which is different from an investor or speculator or other things, but like a trader has to absorb so much kind of one-time or one-off information that, you know, if you were to look at how much information you have to take in that you don't really use that much again, that's a frustrating part. And it could be, you know, 30% of everything that you look at, where it's like, yes, you learn, you get more familiar with the patterns and everything, but, you know, looking through the news of a company, or it's like once that's done, it's kind of done. So that's something that is not always the most enjoyable part about trading. It's just like spending 3 hours, you know, a day, out of a day, just looking at stuff that it might not be super relevant from that point on. What do you guys think?
Yeah, that's like every business though. So let's say you do extensive amount of research on let's say, for example, SMCI, and you killed it. You had it for like the past 6 months. You were successful with it. You sold it. You did well. That information now is useless, but like so is all the information that you use. Let's say you're in wholesale and you're studying clothing or certain things that are in fashion and style. Like styles and trends are always changing in every industry, like whether it's in fashion or real estate, whatever it is. So like you studied so hard to figure out what's in style now, whether it's shoes, dresses, whatever it is. And like now, 6 months later, TikTok brings up a whole new trend and style that you have to adapt to and change to. So although it's past information, you still benefited off it in the moment. Like that's the thing. Like everything in this world, you're gonna have to keep adapting and changing and profiting off it, and then on to the next. It's just a cycle of learning, profiting, and just continuing to do that. So not only though, it's not really a waste of time because you learned how to learn. Like you learned how to do it again for the next one. So you're getting experience researching the companies, especially for you with the fundamentals and the back end of things. Like you're getting used to learning the process of things. So now let's say another company comes up and like you know what to look for, where to look for it, where in the filings, where whatever it is, however you, so you're learning how to study that part of it at least. And that's in every business. So I don't view it as that big of a negative.
Yeah, that's a good point. What do you think, Nick?
You know, I love, it's a love-hate relationship. I think a lot of people can say that. You know, I love that there's no monotony. It's constant adaptability. You wake up every morning and your day is entirely up to you. Whether you make money, you lose money, you have nobody else to blame but yourself. And you have nobody else to congratulate but yourself and maybe some members in IU. But really, I love that it's not all just numbers and tickers. It's human psychology, and I like to think of the market as one giant global brain that's pulsing and it's reacting to every little thing around the world in real time. That's really fascinating to me, and I love that psychological aspect of trading. Now, on the downside of that, right? So there's ups and downs. We're all human, and it's really hard to control our emotions, especially when it comes to big drawdowns and how we deal with getting off tilt, so to speak. I've seen it bring traders down to really, really dark places on drawdowns. And I think I can speak for most traders when I say that we can remember our biggest losses like it was yesterday, the date, the time, the ticker, everything. But our biggest wins don't stand out as much. And that, again, goes back to the human psychology of us, of humans, really remembering fear and pain so that we don't repeat it.
Yeah, it's like a survival mechanism in a lot of ways.
Yeah.
Yeah. I mean, I'm sure you've been in a ton of like really stressful situations and everything. Do you think that like with the military stuff, do you think that that's helped you to be more calm in the markets, or like to put things in perspective? If it's like, oh, this is a terrible trade, but it's like, okay, in comparison to what can happen in the world, you know, it's no big deal.
It definitely puts things into perspective. I mean, it's kind of hard for me to compare military experience to trading experience when like lives are at stake versus money.
Sure.
However, I can say that it is similar in the sense that you can realize when you're in a catastrophic situation and be level-headed about that. And I think that's what the military teaches you, is when, you know, you're under fire or, you know, somebody next to you goes down and, you know, he was your partner, whatever, like, how do you conduct yourself when that happens? You know, so how do you stay professional and cool-minded and level-headed and maintain your breathing and all that stuff I learned in the military, and all of that was able to be transferable to trading, where I've been in situations in trading where you're in the fucking trenches. Excuse me, my British. But
don't blame me for that. I'm referring.
No, but you're in the trenches, and sometimes things are going terribly not your way. But you need to keep a level head. You need to take on a leadership role, which is essentially jumping into action, right? You know, like there's what is it, fight or flight? But there's a third one, and that's freeze. And from my military experience, I've experienced the freeze emotion more than the fight or flight by far and away. And I think that that's one thing I took from the military is not to freeze. It's fight or flight.
Does it also put things into perspective though? Like, because ultimately, at the end of the day, I don't want to say like it's just money, because I know it's, you know, to some people it's more than that. But at the end of the day, it's just like numbers on the screen. Obviously, I know terrible things can happen, but in the grand scheme of things, having a red day or whatever is kind of, I mean, it's nothing. It doesn't affect anyone else. You know, and my girlfriend always reminds me. She always says to me, she goes, "I don't really want to talk." She always says, "I don't want to talk about whether you've had a good day or a bad day. I just want to talk, because that's not." She
Right.
gets it better than I do. Actually, she's like, "That's not important."
Yeah. Yeah, that's definitely true. I mean, you have to treat it as any other job and really not get the emotions affect you on a day-to-day basis, especially if you're in a relationship. Your partner will pick up on that real quick. And from experience, it's definitely something that you want to kind of keep separate. You know, you don't want to hide things, but you want to keep your emotions at least separate from your job and your home life.
And yeah, you also want to keep in mind that tomorrow could be the best day of your career. So like
Exactly.
something happens today, you lash out on somebody, either in your family or your friends, because you're angry about what happened tonight. And then, you know, come tomorrow and you just made everything back plus more. And now you risk something last night that wasn't worth it. So every day is changing. You could be in a terrible mood one day because of a trade gone bad. And then like 2 days later, your accounts are at all-time highs and you're like, what was the point of that? So
Yep.
you gotta just be like one level. When you make money, lose money, you can't have that
But
in
that
either direction.
brings like it round so nicely as well to like having like basic rules as well, like 3 strikes and you're out, that sort of thing. Just means you live to fight another day, which is like half the battle, in my opinion. Is like if you're
More
first,
than half the battle. I mean,
yeah,
keeping chips on the table for anybody who's played poker, you have a certain amount of hands and a certain amount of big blinds, right? And you have to be very precise, very precise. And you're not out of the game as long as you've got chips, because all it takes is one hand. But keeping those chips on the table and making sure that you live to fight another day is so important. And taking that extra risk, whether it be an overnight short or a speculative options play, just always make sure that you have chips on the table. And for me, that means staying above PDT. That's a very low goal for myself, but that means that I know that I'll always have an account to trade.
And Nick, now that you have that, I mean, whenever you came up with that 7% rule, how does that work with either trend lines, key levels, level 2? Let's say it's further than 7%. Like, let's say the right stop is 10, 12%. Like, does that mean it's just like not a good setup because it's that far away, or do you just go less size or
I'll go.
7 no matter what you're
So if I
at?
take less size, I'll have more of a chance of stopping out at 7% because of, you know, the smaller size position. So
Right.
it would force me to take a larger position, which I wouldn't be comfortable taking. So to me, that's not an A+ setup.
And do you take larger positions if the stop is, let's say, 3% away, or do you
Correct.
stick to your same size? But like, because if you think about it, let's say you have a maximum of 7%, right? And your
Yeah.
stop loss is 7%. You could either go, so now your stop loss is, let's say, 4%, but the same amount in, and if you stop out, you just lost less than you should. So it's a good thing. You
Yeah.
know, so I'm going to give this example because it's easier. Let's say you risk 20% of your account and your stop loss is generally 5% away. It's 1% of your whole account, right? Now, let's say the stop loss is 2% away. And now you put that 20% in. You're not going to go to 40%, but let's say you
No.
stick to that 20% and you stop out, you're losing like less than 0.5% of your account.
And that's
So
precisely what I would do.
Right. So you stick to it instead of, got it.
Yeah, I'll stick to it and then add to it if I'm right. You know, you can always put shares back on. And I feel like it's such an overlooked part of trading. It's just people think that they can just take a position and that's it. Like, I took my position, now let's see if I'm right or wrong. No, like if you're wrong, you get out. And if you're right, push it. And I think that the best traders that I've come across in my experience have been incredibly good at that, where they cut losses almost as if they enjoy them. And instead of just taking profits, they're adding to their winners. And that's something that I aspire to be better at. But really, I think that's the way to do it. That's the best way to trade and maximize.
It's not even like about adding to a position. It's also about getting back in as a whole. So like people won't want to sell a position because they don't realize that they could get back in.
Exactly.
And sometimes they don't because they don't think about it. They'll sell out and then they won't look at it. They won't think about the trade the same way because they're not in it. So that's something that is also very important to understand, is that like you have freedom to do anything you want. Get in, get out.
Totally. And that's, you know, I always talk about how that's different from like gambling on sports or whatever it is, because once you're locked into a bet, you're locked in. But with trading, you can be in and out, in and out, in and out within seconds. You can change your opinion on a dime. And it's very different.
I'm not going to lie. If anyone's confused by some of those percentages and I was confused. So, I mean, I go by really simple 1%, 2% of my account based on a level. And but I think
it's basically using more size if it's a tighter stop rather than like sticking to the same size all around.
Oh, I see. I got you.
Instead of like, it was confusing, but
no, it's just like percentage. Like,
I even confused myself a little bit.
no,
I understood what you were saying.
Yeah, like I said, you two seem to understand it really well. So I was like, it'll probably make sense to everyone. It's just me.
I hope so.
One thing I forgot to say earlier is, if you are enjoying the conversation, please like, subscribe, and please comment with your aha moment or just a key takeaway from this conversation. I know we've just been chatting about all sorts, but hopefully, Nick's dropped loads of nuggets here. So just comment your favorite one, and you could win a chance to win a free month of IU. Something that I particularly, I'm just interested and I touched on your style, but in terms of like mentors, resources, things like that, how have you got to this point? Who's been valuable, who's been important, and what has been important as well?
Yeah, so I was actually turned on to trading while I was in the military by a buddy of mine who recommended Tim Sykes, and that's kind of where I started. So I joined his program, and I spent a couple months there. I would say that Sykes taught me the ABCs of trading, but I realized very quickly that it just was not a room for me. There was no real growth, learning potential. There was a lot behind the scenes that I just wasn't comfortable with. Moving on, he really did, teach me the fundamentals, but honestly, I thought that the best way for me to do it was just to jump right in. So I opened up, I think my first account was Thinkorswim. I put $4,000 into it. I quickly grew it to 75,000. And then over the course of the next few months, I ended up giving most of it back. And that's when I knew that I needed a real community. I did my research, and ultimately led me here. And it's definitely been one of the best decisions I've ever made.
I think it's amazing how many paths are actually quite similar. I'm interested though, because we've heard there's a lot of very successful people that start out on this massive high, they grow a small account, they grow pretty big. Chris, Judah, did you two start simply? Because I got to be honest, I was the opposite.
What do you mean?
Judah,
You're
why
the
don't you go ahead?
opposite?
What was that?
How are you the opposite? What do you mean?
Oh, I put 5,000 in, and it was quickly 2,500.
Ah, I
That's
got it.
what I mean.
When
I
did you
didn't-
start though?
I had to like put it, and then I had to put some more in, and then same thing, and then eventually it like just flatlined, and then eventually I hit my stride. But it took me a while.
When did you start, Sam?
I started 2019. I just started UK wise, and then ended up moving. To be fair, like actually, this is a bit of a lie in terms of like I started off just by like investing, and it went really well because I used like my medical background, and like that went quite good. And then I don't know. I guess I just got like I really like the ideas of the thrills of trading, and I started trading US stuff. And then I was like, this is crazier than I thought and I expected. And I slowly just chipped away at my account. But did you two go on like a massive high at the start, or was it like a bit
Yeah,
more?
it was. I joined right after the March COVID lows. So like how I started was basically off Twitter. I would follow like hundreds of people on Twitter, and I had alerts on for all of them. Even now, like I only follow 50 people today. Everyone I kind of know, all three of you I follow. I either met them or they provide value. I pretty much have alerts on for everyone that I follow. And it was the same way back when I had like 300 people I was following. And anything they posted, I would just take and I would just sleep on it. I would trade off my phone. I had no setup, no monitors, no PC. And like you would wake up the next day and it was higher. Like Mara Riot were 50 cents at the time. Genius was like one of my biggest at the time. It went from like 50 cents to $11 over a few days. That I held because I didn't know what else to do. Like I just bought it and I wasn't thinking. So everything was just like heading higher and the counts kept going higher. Eventually things started topping out and rolling over. And that's kind of when so basically I think Nate knows the story, and I mentioned it also when I spoke on the roundtable in Vegas a few years ago. But Nate was never my biggest, like I always hated Nate's tweets because they always went against everything I owned. Like everything I owned on the long side, Nate would try to be shorted. So I was like screw this guy, F this guy. I would like hate his posts. It was always opposite of what I was doing. And nonetheless, he was making money also. That's like another thing we touch up on a lot is making money on the same stock going both short and long, either swinging it and then he does the intraday shorts. But basically, he was shorting them over time. When the market did start to top out and roll over, I realized that the things I owned and the things that he was shorting were going his way. And that's like when I tried not to be stubborn at all about it. And once I realized that like most of the things he posted, and he gives reasons why, like he doesn't just say this thing's going to a certain price and lets it be at that. Like he explains why, he gives levels, gives a lot of good reason around it. If you just take a minute to read it, look into it, you'll understand a lot more in depth about what he tweets and his ideas, because they're definitely worth looking into. And once I started doing that and like actually reviewing his tweets, I realized that he was right and I was the one that was just getting lucky, and I was just upset at him for being right. And that's when I looked into IU. I joined IU, and that's when I really started learning. But yeah, my account started off as a high, started like quickly giving back gains, and that's I guess when I put in the effort to really learn and grow and make this like career last, because I enjoy it more than just the profits behind it.
It's funny because that's just quite similar. I'd be long something, and then I'd see that Nate was short, and I'd be like, hang on. And that's how I got drawn to him in the first place. And I suppose that's actually how through the help of Nate and IU, is actually how I sort of was able to identify my person. I needed to find someone who I resonated with, who had a sort of, I don't know, just like a similar outlook, just someone I understood. And then from that point on, I was able to, it just sort of made sense. What about you, Chris? Did you start on a high?
Yeah, I did, because I started as a speculator, not so much a trader. And that's more someone who bets on outcomes as a whole instead of looking at like the day-to-day or kind of the micro movements. So I was more focused on, if I can get this thesis right, then I can get a big payout. And if not, then I lose half or, maybe all of my investment. So it was like an expected value game, just in a different way of trading. But yeah, I started in like late 2015, early 2016. And the first sector that I really got involved with was the gold sector. And it was because at the beginning of 2016, there was like a China meltdown, economic problems, and the market was in a big correction. And so I was just getting involved in the stock market and everything. And I just want to look at, the market's going down, but there's like one or two sectors that are going up. And one of them was gold. And so gold was coming out of like a big bear market. And I just started like researching it. I looked up YouTube videos and I found these guys who were like mining financiers, like natural resource investors. And they would basically either finance a project or a company. They were constantly talking to the CEOs, and they were like, very good businessmen, investors, and everything. So they call themselves like speculators. And it's like a mix of market cycles, technical analysis, and then also fundamentals. And then you basically put all that together. And then if you find something that has a big enough payoff, you kind of enter it, and then you just leave it go for a couple of months, and you either get paid out or you don't. So that was like how I initially got started in the markets. And so gold ended up doing exceptionally well. Like I just kept buying these different companies. I kept looking at interviews, and I had like probably 10 or 20 of these gold companies, and a lot of them were up like 5x, 7x. And I was like, this makes so much sense. I'm a genius. It was just ridiculous. And I think Howard Marks, who's an incredible investor, he has a great quote. I'm going to butcher it a little bit because I don't remember exactly, but it's like, for success, you need three things, and that is timing, intelligence, and aggressiveness. And if you get the timing and the aggressiveness correctly, then you don't need much intelligence. And that is exactly what happened to me, how I was just in the right sector and I was very aggressive. And so I started out like, doing really well. And then when that cycle ended and the market pivoted, then I was like, oh my gosh, like now I actually have to learn like the other side of, trading and long-term investing and everything. So that kind of kicked it off. But yeah, the gold sector was a huge one to start.
Well, nice stories. I mean, just as a caveat to mine, how I started was, how I really got into it was I bought loads of, at the beginning of COVID, I bought loads of testing companies. I've been like sort of like investing before and hadn't gone well. I bought loads of like just UK testing companies, and like they just went nuts, like 500%, 600%. It was just crazy. It was really when I went into day trading, I was like, I don't know what, I was just really drawn to day trading, and it was just difficult. But I look back and actually, like, I'm really grateful that it wasn't, because I think like if I had gone from 4K to what did you say, 75K really quickly, and then like came down quite a bit, I think that probably would have hurt me quite a lot, to be honest. Obviously, you bounced back, right, Nick?
Yeah, I mean, I think it's persistence, and that's key. A lot of people give up in year one because they take a big loss, or they give a lot of gains back, or they don't even get off the ground running, and they just give up. But imagine if you went to grad school and did the same thing. Every single time you fell into, a test you couldn't pass, or just if it felt like too much, like would we have a lot less doctors in the world today? And I think about that a lot. Like I paid my tuition. I spent 4 years in the markets, and I learned, and I made mistakes, and I lost money, and I made money, but I gained a profession, and I don't view it any differently.
Yeah, no, absolutely. And I think we are just about running out of time. We want to finish with some quick fire questions. They're just always just a bit of fun. Firstly, though, the winner from last week's key takeaway or biggest aha moment is billionaire. And I hope I'm guessing your name's either Billy or you're a billionaire. Either way, sounds great. And obviously, firstly, he says thank you to us, which is pretty cool. The human mind advantage over a computer, weighting various variables. let's say, and I think a lot of people took a lot from this chat with Greg, and particularly this moment when he was talking about if you had a net worth of 20 million, does 30 million make your life that much better? Whereas, like, perhaps if you're on the smaller scale and you can, if you're at 30K and you can get to 1 million, actually your life's going to change quite, considerably. And I thought that was really a really poignant thought. And it was great advice about networking. And Nick, I think was last year your first Traders for a Cause?
Indeed, it was. Yes, and I'll be back next year because I gotta outdrink you.
Well, good luck with that.
I've been putting on pounds, Turbo.
I'm trying to lose pounds. I don't want to be a big drinker anymore.
Give me some.
Yeah, you'll lose just like Scott. And guys, like I said, we're in the same contest. So aha moment or your big, or key takeaway from this conversation. It can be absolutely anything. The best answer in the comments wins a free month of RU. And billionaire, if you email tyler@investorsunderground.com, you'll get your free month. Right, let's get on with a quick fire Q&A. How has your perspective on trading changed over the years? Has it become more simple or more complicated the more you learn?
I would say it has definitely become more simple in the fact that I set clear and defined boundaries over the years. So it's very simple to me now when I'm right and when I'm wrong, when I should be in a trade, when I shouldn't be in a trade.
Yeah, fair enough. And Chris, Jude, if you want to jump in with any of these, please feel free. So okay, this might be like your aha moment, but what's been the best advice you've heard on trading?
Best advice I've heard on trading has to be to keep at it. Find your weaknesses, find your strengths, and hone in on them. But don't ever let that inner voice or other people talk you out of doing what you're passionate about.
Well said. Well said. And this is always my favorite question. What has been your favorite or best purchase over the last year?
Cool. That's a tough one. You know what? That's got to be Dawson's chess set.
Oh, wow. Yeah.
Yeah, I'm going to be promoting Dawson. He makes unbelievable woods craftsmanship work. I don't know what he does exactly. It's not my forte, but no, he really does incredible work, and I got that from him, and I'm real happy with it.
Yeah, he's talented. So what did you buy? Was
Not the guy.
that through Traders for a Cause?
No, so I actually saw on Instagram that he was doing this woodwork. He was making chessboards. I reached out to him, and he made one for me.
Wow, that's cool. And have you used it then quite a lot?
Absolutely, I love chess.
Nice, good purchase. This one, this might be controversial. I think we all should probably answer this.
Yeah.
What is the best finance or stock market movie?
This is a tough one because I feel like a lot of people are going to say Wolf of Wall Street just because it was entertaining.
Yeah.
But I'm going to have to go with either Wall Street, the first one, or Boiler Room.
Okay.
Yeah, I agree on those two.
I'm going to go with either Margin Call, which is an incredible one. I think everyone should watch that. And I think is it Moneyball, the baseball one?
Yeah.
So it's not directly about markets, but it has very similar.
Yeah, Moneyball is great. I didn't know that was an option. All right.
Yeah, I'm bringing it from the outside.
Now you've bent the rules, Chris. I think I would go with that as well.
Yeah, that's a great one. But
it's a great movie.
Yeah. It really highlights, especially for like asset allocation, about how things as a whole, like, you have many parts. If you get the whole kind of right, they can have a better outcome than just like relying on one single thing. But then the movie Margin Call, it just has some epic scenes in it. And I think it gives you a good like taste and demeanor of what a lot of like Wall Street is like, and just kind of the ruthlessness of it, and kind of looking out for their interests. But that's a good one, Margin Call.
Yeah, I mean, at least
also, before we finish, I just want to go back to the first question that you asked. It's a little late, but if your trading is getting more difficult, then something's wrong. Like trading for you should only become easier. You should learn what your weaknesses are, learn what your strengths are, understand what you should be avoiding and what you should be chasing, and work around that. So like if things are getting more difficult, something's wrong. So like it should only be getting easier. That's when you know you're on the right path to eventual success. So that's my answer. That I don't want to cut Nick or you off earlier, but there's that.
No, cool. No, thank you very much, and thank you, Nick, for joining us tonight. And how long is this going to last then? A while?
You know what? Until this fills out, so probably infinity.
Once you beat Sam at some drinking, the rest of the beard will come in like a rite of passage.
See, you're making me. I've had like probably 5 beers all year. I drink I can see you sipping your wine the whole episode. I'm on water. I've been drinking water, and I may treat myself to a non-alcoholic beer. That's about as adventurous as I get.
You should. You deserve it.
Thank you. And just lastly, where can people find you? Obviously, other than IU.
So you can follow me on Twitter at Kfir Capital. That's KFIR Capital. Instagram, but yeah, just go to my Twitter profile. It's all there.
Cool. No, thank you very much. Thanks, guys, and
thank you, Nick.
Thanks
for having me, guys. I appreciate it. This was an absolute pleasure.
Thank you.
Thanks.
Have a good one all.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of our others with some great traders. Thank you for watching.